I just hit 200 shares of SPMO when it comes to my portfolio. I've invested about $30,000 and I'm up roughly 6,000, which is 25.54%. It is a red day on the market. So my portfolio position is down about 3%, nearly $1,000. But I like to buy on red days, and so I added that last little bit that I needed to get to my 200 shares today. I often get the question, is it too late? Am I going to keep buying? I'm going to talk about those things in today's video, but I'll let you know now, this is an investment that I'm interested in buying and holding at all levels. SPMO is heavily weighted into Micron, NVIDIA, Broadcom, Google, and AMD, many of which are in the area of semiconductors, which are feeling it today. NVIDIA down 2.3%, Broadcom down 3.17%, and that top holding, Micron, down 7%. These mega cap tech names are facing a pullback, and this is driven by profit taking, some investors rotating into those defensive sectors. We'll be having a rebalancing coming up next month when it comes to SPMO. So we also need to be ready for that. The new lineup when it comes to this investment. When it comes to these leaders in the area of semiconductors, another issue is inventory concerns. But all of these factors are normal. We have to expect things to cool down from time to time. Taking a look at SPMO versus VOO, which tracks the entire S&P 500, we can see that the same volatility that powers SPMO in uptrends also amplifies when we have those short-term dips, which you can see here with this orange line being SPMO, how it spikes much higher than the S&P 500, but also dips much harder. Now, let's talk a little bit more about Micron, which is 10% weighting when it comes to this fund. Earnings and exploding due to AI memory demands. And so it is a huge factor moving this ETF. The last time Micron reported earnings, revenue came in at $41.46 billion, up from $23.86 billion the previous quarter, and $9.3 billion the year before. So we can see why this company is the highest weighting in this ETF. AI requires a massive amount of memory, and Micron has the products. They're producing it at a high volume and they're ready to ship. And so they're anticipating moving up to $50 billion in revenue by Q4. So when I see a company like this in my ETF, I know it's not random. Let's talk a little bit about what is SPMO. What makes it different? It's Invesco's S&P 500 Momentum ETF, but it doesn't hold 500 companies. It focuses on about 100. It looks at the companies inside of the S&P 500 and asks which ones are showing the strongest momentum. And those get the exposure in the fund. And I like that. I don't have to choose individual stocks to invest into. I don't have to rebalance my portfolio in order to cut any that start to lag. This fund keeps me on track for the companies that are going to be the next winners. This strategy has been working for over 10 years now, beating the S&P 500. The fund rebalances twice a year in March and September, not keeping us locked into that same lineup of companies for too long. So this is why I'm comfortable holding this. I'm holding it long term in one of my portfolios over Fidelity. So that rebalancing is coming up next month. So if the companies that it's currently having its highest weighting into are not on track to continue driving that momentum, they'll be shifted out, or at least to a lower weighting when it comes to the fund. We'll see in the next few weeks. So yes, this fund has risen just like the S&P 500 has. When it comes to the S&P, we've had 3 all-time high closes already in the month of August. So just because a fund, an indice, or an individual company hits an all-time high, it doesn't mean that it's too late for it to be added into my portfolio. And that's an easier decision for me when it comes to a fund, a whole basket of stocks you get when you invest into ETFs that track the entire S&P 500 or SPMO, my Momentum ETF. So here's a look at the average rate of return of both VOO, which tracks the S&P, in SPMO, Invesco's Momentum ETF, and across the board, you can see that SPMO outperforms the S&P on all time frames. It's been around for about 11 years now. And using the 10-year performance, let's take a look at an example. Over the last 10 years, the S&P is up about 15%, while SPMO is up about 20% on average. So this is what a $10,000 investment held for 10 years into these two different funds would look like. And you can do research and take a look at the average rate of return of your investments to find out how much you'll be gaining by holding on to them long term. Go to the investment calculator, put in an example like we're talking about right now, $10,000 after 10 years at a 20% rate of return, and you'll be a little over $62,000. This is what an investment into SPMO can look like for you. At about a 15% rate of return, this is what the investment into the S&P 500 would turn into, about $42,000. So I have investments into both when it comes to my portfolio. My S&P 500 investments come with less volatility, more diversification, and a much lower expense ratio. But I'm definitely comfortable with the position that I've been building on into SPMO for that additional growth. If you haven't ever done it before, take some time and use the investment calculator and set some goals for yourself. Know what you're on track to achieve. Right now, when it comes to my portfolio, I'm focused on growth and I'm building up my positions into SPMO as well as SMH and VGT. So now that I've achieved a share goal when it comes to my SPMO, I'll be working on giving these other two ETFs some more attention. I have 9.5 shares of SMH, 5 shares of VGT, and they're all slightly down on the day. But these are all ETF, so they're going to be impacted when semiconductors, when tech has a pullback, but I understand why, and I'm ready and willing to wait for the recovery. These funds are rules-based. They have a strategy. They're going to keep me on track. And when it comes to these funds, all of them have been outperforming the S&P 500. This is a look at the performance over the last 10 years. SMH up about 1,800%, VGT up 794%, and SPMO up 526% versus the S&P at about 315. But there are differences when it comes to that volatility. So you have to be ready for that. That higher performance also comes with a higher cost. As you can see here, SMH has the highest expense ratio at 0.35%. SPMO is at 0.13%. VGT is at 0.09%. And VOO, which I do have in my taxable account, is at 0.03%. So these strategies may not work the same every year. These funds are concentrated and more aggressive than the S&P 500. But I'm comfortable with that. I know I have a strong foundation into the S&P and into my total stock market fund, which is VTI. So now these are the funds that are part of my current strategy. Something different with a specific job. So I've been working towards this goal and now I achieved it. My average price when it comes to my shares is $119.75. I started building in late 2025. And I'm glad that I continued building even though the price movement was slow. The growth was slow at first. So now I'm going to continue watching. I'm definitely going to come and give you an update when those new companies are added and removed. And I'm going to be giving SMH and VGT attention, but that doesn't mean that when the opportunity is there, I won't continue building into my SPM. So make sure to let me know in the comments, are you holding this fund in your portfolio? Do you think that this method is still working and that it's going to continue to be successful? I do. It may not happen immediately. There may be some time frames that it's not moving quite as quickly. But long term, it has proven itself. It's adapted and thrived based on those companies that it tracks out of that S&P 500. Right now, highly driven by semiconductors and AI, but eventually those leaders can change. And when it does, that strategy will be tested again. I like setting share size goals and dollar size goals to keep myself motivated. I know my priority is to stay on track and continue building wealth. Here's a look at analyst ratings from Tip Ranks. They're giving it an average price target of $191, which would be a 26% upside from where we are currently. Just something to think about if it's a newer position to your portfolio. What it's on track to achieve, and if you're already holding, what additional gains we're in store for. That's it for today's update. Share in the comments. Are you working towards any goals right now when it comes to this fund or any others? Let me know. I can cheer you on as you hit those milestones. Thanks for watching. Make sure to like, subscribe, hit that notification bell. Hype this video. Check out my referral links and info on becoming a channel member. Okay, bye.